What's going on, everybody? It's Spencer Gray, president of Gray Capital. I wanted to give you a quick update on the progress we're making on the Gray Fund. Now, if you're not familiar with the Gray Fund is a $100 million equity fund targeting existing cash flowing multifamily apartments, primarily in the Midwestern United States, particularly Indiana, Ohio, Michigan, and Kentucky. The reason why we've chosen these states and markets is because the markets are growing, the supply is low, and the demand is high, but there's not as much investor interest compared to some of the Sunbelt states, giving us a great amount of cash flow or really exploiting some of these market inefficiencies. So if you're interested, just before we get into it, learning more, downloading the investment deck for the Gray Fund, you just want to pop over to gray.fund. Easy as that. You're welcome to add an https:// which is gray.fund into your browser. Will take you right there. You'll be able to download the full investment presentation, schedule a meeting with an investment associate, and get started on the process itself. But I wanted to let you know, again, update on the progress, because we've got three projects under LOI. These are all assets that meet or exceed the acquisition criteria for the Gray Fund, and I wanted to just touch on some of the details, giving you a quick sneak peek. Let's get into it. First, just a reminder of some of the criteria for the Gray Fund. So we're looking at 100 units or more. We're looking for markets that are growing. That means positive population growth, positive job growth, but ideally low supply. We're also looking at properties that have minimal physical obsolescence. One way we're ensuring that is only pursuing assets built after the 1980s or newer. They also need to be throwing off enough cash flow to hit our 10% monthly preferred return that goes to our A units, as well as providing an IRR in the fund of at least 18% to the B units. Now, that's not always easy to achieve, and we have relatively tight criteria, but we'd rather do great projects, not just any deal that comes across our desk. So let's look at the first three assets that are going to be in the Gray Fund. So the first property, it's in Indianapolis, Indiana. In the Indy submarket, Gray Capital, our headquarters, is in Indianapolis. We have an incredible amount of market knowledge, and those connections in the market have really been the reason why we've been able to secure three great opportunities in such a competitive market. So this first asset, Asset 1, it's 122 units. It's in the Mount Comfort submarket. The reason why that's important is one of the themes of the Gray Fund is taking advantage of all the logistics, warehouse, and e-commerce growth that is occurring in quite a few Midwestern markets, but especially Indianapolis. There's over 21 million square feet of industrial currently in the development pipeline in Indianapolis, and a big chunk of that is all out on the east side near this Mount Comfort industrial corridor. Now, this asset, and I can't tell you the name of the asset because we're not under contract, so we can't disclose everything about it, but it is within immediate proximity to millions of square feet of industrial being built, and that's going to be a direct result of hundreds, if not thousands, of new jobs that are going to be coming online over the next 5 years. At the same time, in this exact submarket, really the entire east side of Indianapolis, there is no new apartment units in the construction pipeline. So we see wages rising from all these new warehouse jobs, all of these relatively blue and gray collar jobs paying anywhere between $18 and $40 per hour. All of this job growth, all of this wage growth, but there is no rental stock coming in to the market. And the submarket's already 95 to 97% occupied. Again, this is just exacerbating the supply and demand gaps that we're seeing in multiple markets, but the east side of Indianapolis is a particular example. So just a little bit about the business plan for this first asset. It's going to be a medium value add And so that means about $10,000 per unit. It could be up to $12,000 per unit of renovation. The current in-place rents are about $200 below just the current market comps. And existing renovations, there have been a few units that have been renovated to the property, they're getting an additional $200 rent premium. So there's anywhere between $200 and $400 rent increases we'll be able to achieve over the next 2 to 3 years in the inception of the business plan. We're purchasing this asset for just under $120K per unit. That's a steep discount to the current market. There was several properties in Indianapolis that they just left the market. They just went under contract. They're under contract for over $200,000 per door. It's $80,000 more than these assets, and they're this exact same year of construction. So we've got a lot of great built-in equity going into the deal, and that's one of the reasons why we're able to generate some really attractive returns. Right now, we are projecting just under 10% average cash on cash, an IRR of 22%. And over a 5-year hold period, we're looking at an equity multiple of 2.3%. So now that goes to our B members of the Gray Fund itself. Because you know the A units themselves, they just have that 10% preferred return and not as much upside. But if you are an investor of either a blend of the two, you're getting a really nice, not only cash flow, but really nice value appreciation, which is going to result in a really excellent risk-adjusted return. Now the second asset in the Gray Fund, it is up in West Lafayette, Indiana. Now, West Lafayette, it's home to Purdue University, but it also has a diversified economy, a lot of technology, a lot of advanced manufacturing. It's also just like a really nice growing mid-sized city. It's a little more than an hour's drive northwest of Indianapolis, and just right up I-65. Our team has a lot of market knowledge for West Lafayette. Jay Reeder, our Senior Vice President of Acquisitions, he's from Lafayette. Matt Bosnagel, our Director of Communications and Marketing, went to Purdue University, and we have owned and invested in several assets in the West Lafayette and Lafayette market, so a lot of market knowledge. This is a newer property built in 2 phases between 2001 and 2019. There's 206 total units. It's very walkable. It's a very walkable location. In fact, the quality of this location can't be underscored. It's immediately across the river from the pedestrian walking bridge in West Lafayette. It's kind of in the center of all the restaurants, right in the center of all the bars, the center of a lot of kind of the nightlife and just what's going on, kind of the best spot in West Lafayette. It's in immediate proximity to the university, but it's not necessarily completely full of students by any means. It's a relatively diverse resident base, although it does include a handful of students, a lot of grad students, and a ton of international students. If you go into the parking garage, you're going to see Maseratis, Mercedes. It's that type of resident base. Unfortunately, even though it's relatively new, again, 2019 was the second phase. It went through a renovation around that same time period, so the clubhouse looks incredible. But all the new construction in West Lafayette is $300 to $400 more than this high-quality asset, and arguably a better location. So we're going to do a light value add to the first phase units. It's about 90 units themselves, so 90 unit value add, and this is going to be a light value add, because like the cabinets are fine, a lot of the finishes are in good shape, but between just upgrading some of the plumbing fixtures, maybe swapping out some of the lighting, possibly dropping in some new black stainless appliances, we really feel like we can get that premium that is demanded in this little tight niche of a submarket in West Lafayette. Another reason why we're excited about this project is the basis itself for the high quality asset that it is. We're buying it for just around $200 a door. Now that's obviously more than what the first asset is at $122 a door, but again, extremely sought after location, newer construction, 2001 and 2019. And I'll just remind you, that portfolio that just went under contract down in Indianapolis, just a little more than an hour away, those were 90s built product that are going for $200,000 a door. This is a 2001 to 2019 built product going essentially for the same, much higher quality, much better location. We feel as though this is an excellent basis. And just again, I think we're getting in with a lot of built-in equity, which makes us very excited. So in terms of the returns themselves, we're looking at cash on cash right around average of 8%, and we're looking at an IRR just north of 18%, and an equity multiple just north of 2x over a 5-year period. And just as a reminder, again, the IRR and the 2x equity multiple, that only relates to the B units. If you are only focused on cash flow, you want to try to look at those the A units, because they feature a 10% preferred return that's paid monthly. But most investors, they're doing a combination of both the A and B units to create their own tailored risk and return profile based on whatever their unique goals and interests are. Again, hop on over, grab the deck at gray.fund. We lay out all of the different return profiles so you can really dial in exactly what's right for you. So it's worth just checking that out. Again, just pop on over to gray.fund. So the third asset in the Gray Fund portfolio, this is going to be asset number 3. This is up in Lansing, Michigan. Lansing is the state capital in Michigan, home of Michigan State University, and the location, the specific location of this asset it's everything that you would want in a location and a submarket. It's hard for me to describe the excitement, and members of our team can attest to this. When we were really digging into the demographic information of this submarket, it's everything that you want to see. The numbers and the KPIs get better as you get closer to the property. We're talking about $88,000 in terms of median annual income, population growth, a little over 1.5% per year. I think there's 60 units in the pipeline for construction, so an incredible amount of demand but low supply. Diversified economy. There's a major corporate headquarters across the street, all these research facilities down the other road. And actually at the property itself, there's incomes of $110,000 at the median. So a lot of room to move rents, a lot of demand in the submarket. But also there's a lot of scale up in Lansing, Michigan. So it's 406 units, so it's a little bit of a big asset, but we've invested in assets larger than this. It's a medium value add. So we're gonna put in about $10,000 per unit. Mostly cosmetic upgrades, although there's going to be some light deferred maintenance that we're going to be improving as well. But again, the opportunity here is to take advantage of the high incomes in the submarket, the lack of kind of higher end housing. But also we have a lot of flexibility in terms of staying onto the market, in terms of watching organic rent growth, because we may not even need to do as large a renovation if we were really seeing the organic growth and just really focus on what needs to be done, not necessarily the things that we want to do. At the same time, experiment with some ultra premium renovations to really see if we can get a big pop closer to $500 per month on the renovation. But the rents, similar to the last two assets, they're $200 below market. I know that's not all the details on these 3 assets. There's a lot of details on the acquisition of any property. That's because these properties are only under LOI or letter of intent. As soon as we have them officially under contract, we'll be sharing all of the details, being fully transparent as we like to do, so you can feel comfortable and understand what the assets are going to look like. But you want to make sure you're in the Gray Capital kind of ecosphere in order to receive those updates. So what you're going to want to do is, again, hop over to gray.fund, be able to fill out a quick form. That'll get you the investment deck itself, as well as the ability to sign up for an investment strategy session or just have a quick conversation with myself or William Costello, who's heading up our investor relations team, be able to answer any of your questions, kind of go through the structure of the fund. Again, because we have A units and B units. A units are targeting 10% preferred returns distributed monthly. The B units focused on upside, up to 24% IRR, 4x multiple over 10 years. But most investors are investing in a combination of the two, kind of finding a blend to really hit their preferred and individualized risk and return profile. So again, to get started, hop on over to gray.fund. If you're already ready to go, you can just go to graycapitalllc.com, log into the investment portal, and execute the deal documents and become a member of the Gray Fund today. But if you'd like to speak to a member of the investor relations team, again, feel free to reach out. Gray.fund to get started. We'll walk you through the process and make sure you get set up the right way. There is a $100,000 minimum for the Gray Fund. It's only open to accredited investors, and that investment minimum of $100,000 will actually increase to $250,000 later in the summer. We're not sure how many capital calls we're going to have. We may have one, we may have three. Most likely it'll be two. And what I don't want is for people who are interested in investing in that sub $250,000 range to miss the capital call that will allow sub $100,000 investments. So if you want to get allocated some great cash flowing real estate that's going to benefit from this huge leg up in inflation we're seeing right now, now's the time to do it, because when it's too late, it'll unfortunately be too late, and I can't say for certain that the fund will be open even throughout of the year. So if you are interested in allocating to multifamily apartments with an experienced sponsor that's invested in over 10,000 apartment units in some great assets managed by a great team, again, just get started at gray.fund. We'll talk to you soon.